You swipe your card. The screen flashes approved. Your coffee is handed over. And right there, without a sound, your money stops being yours. Not stolen, not hacked, just reassigned. Most people believe their bank is a vault, a safe place. Money goes in, money waits, money comes back. That's the story we're told. It's also wrong. Here's what actually happens. You deposit 10,000 rupees. In your mind, that money is sitting somewhere with your name on it. But legally, the moment it hits the bank, ownership changes. The bank now owns that money. You don't. What you have is a promise, an IOU, a number on a screen saying the bank owes you 10,000 rupees when you ask for it. That sounds fine until you ask the next question. What is the bank doing with your money right now? It's not resting, it's working overtime. Banks operate on something called fractional reserve banking. Simple idea, big consequences. Out of your 10,000, the bank might keep 500 in reserve. The rest gets lent out to someone buying a car, to a business expanding, to someone else's mortgage. And here's the quiet irony. That same money gets deposited again and loaned again and again. One deposit quietly turns into multiple claims. On paper, everyone thinks they own money. In reality, it's the same money wearing different names. This works beautifully as long as nobody panics, because the system isn't built for everyone to ask for their money back at once. That's not a conspiracy, that's math. If too many people show up at the same time, the bank can't pay everyone immediately, not because it's evil, but because the money isn't there. We've seen this movie before, 2008. Banks looked solid, screens showed big numbers, but underneath, the promises collapsed faster than confidence. Government stepped in, not to save depositors first, but to save the system, because when banks fall, payments stop. Salaries freeze, businesses choke, and trust disappears. That's why your deposit is insured, not because the system is safe, but because it needs belief to survive. Now contrast this with how banks advertise. Your money is safe, trusted for generations, built on stability. Technically true, emotionally misleading. Your money isn't sitting in safety, it's circulating, risking, multiplying. You're not a customer with stored wealth. You're a lender who didn't negotiate terms. Zoom out far enough, and this becomes uncomfortable. The entire economy runs on borrowed confidence. Money promised, value assumed, stability maintained by everyone agreeing not to question it at the same time. And most days, that agreement holds. But here's the thought to sit with. If your money isn't really yours while it's in the bank, and the bank doesn't actually have it all, then what exactly do you own? Just a number, a promise, and faith that the system keeps working tomorrow.